Today on the CEO Barbecue, we're looking for high-grade gold in Canada's Valley of Gold, also known as Val d'Or, together with Cartier Resources. For a bullet point summary of this and all other CEO interviews, please go to resourcetalks.com and subscribe to our free weekly newsletter. The company you're about to hear from has paid us for the production of this interview, but this interview is still intended only for experienced speculators because this is venture capital and mining is a very risky industry where failure is the norm. All conversations are general and impersonal in nature, and they contain forward-looking statements. I'm not a licensed financial advisor, and my business sells content-producing services, which also makes me biased. So before continuing on, please talk to an independent investment advisor with a good long-term track record because your capital is at risk, and also visit setterplus.ca where you'll find the company's official filings. If you're not 100% sure you understand all the biases and the disclaimers that I just showed you, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said herein. That all said, this is not Cartier's first time on the CEO Barbecue, so I'll save you the 10-minute company overview here, and I'll instead link the previous interview in the description of this video. Please watch that if you haven't yet, because it was a long and an in-depth conversation. That's where we did the smell test and where I did the main part of the grilling, if you will. In a nutshell, though, the story of Cartier is one of high-grade gold, again, and specifically Quebec gold. The company's flagship project is called Cadillac, and it sits just outside of Val d'Or, actually, in the Abitibi greenstone belt. There is a historic mine on the property and also a 2.3 million ounce current resource on it, about 70% of which is inferred. And the main job for Cartier right now is drilling 100,000 meters to update that mineral resource and hopefully find more of that gold. Some of the drilling has now been completed, and there have even been some assays, so they have found more gold, which of course we'll look under the hood on later on in the conversation. What else is going on? How efficient has the program been so far? How much money they've left, and much more community and environmental, as well as of course great continuity and everything else later on in the conversation. Cartier is listed as ECR on the TSX Ventures Exchange, where the average 3-month volume is, it's actually gone up a lot recently. So it's about 500,000 shares now. The stock's 52-week high is 24 cents and its 52-week low is 8 cents. With a market cap of just over 95 million Canadian dollars and just over 442 million shares outstanding, today this is a 21.5 cent stock with a 50 and a 200-day moving average at respectively 18.8 and 13.4 cents, which means the stock is now trading well above both of them. Cartier also has a new financial statement. The last one I looked at had an effective date of March 2025, and this one takes us 3 months into the future to June 30, 2025. Again, the company has been drilling since then, so the cash balance will be different at the current time. But at the time, on June 30, it was about $11 million. Still, no long-term debt and no short-term debt either, although the current side of the liabilities does show a $1.6 million liability. That is related to flow-through shares. So that's not an actual cash debt. It only becomes payable if Cartier is not able to spend the flow-through dollars they raised in April, but they have until the end of 2026 to spend what was, I believe, $5 million of flow-through at the time. And again, flow-through can only be spent on exploration, and exploration is, of course, not cheap. So I don't expect this to become an actual payable. Moving on to the P&L for the 3 months ended on March 31st. So this is the previous financials. The amount in actual out-of-pocket G&A, so excluding share-based compensation, at the time sat at an average of $133,000 a month, again, specifically for the quarter ending on March 31st this year. But for the second quarter, that number seems to have dropped a little bit, and I calculated it at $123,000 per month on average, which is it's a little bit higher than last year's $100,000. But again, the company was getting ready to drill. It's becoming much more active right now. Doing that 100,000 meters is, of course, going to be more expensive. Normally, this is where I provide a breakdown of the exploration expenses as well as look at the ratios, such as the drilling to marketing ratio and the exploration to evaluation ratio. But again, exploration, or the 100,000 meters of drilling here started in August. So there wasn't much drilling or exploration going on in the first nor the second quarter of this year. But that is now changing, of course. And we'll talk about all that further on in the conversation. But as always, I would also like to remind you to be cautious because your capital may be at risk. And please visit setterplus.ca where you're going to find the company's official filings and do further due diligence. Enough accounting for now, though. It is finally time for me to shut up and Philippe let you do the talking. But first of all, thank you for being here today.
Thank you very much, Antonio. And I'll start off with a small correction.
Sure.
The 100,000-meter diamond drill program has a very ambitious target. We're targeting a camp scale environment, and that is over 15 kilometers of ground that's to the east and to the west of the past producing line. So the updated resource estimates that we'll be doing, or PEAs, will be on the balance of the 58,000 meters that was done previous to the financing in April. Um, so yeah, the drilling is really targeting what we discovered in 2024, which is to say that when we consolidated or bought O3 Mining's ground to the east and to the west and to the north and to the south, we discovered that there was about 90 years of exploration work that had uncovered and discovered many high-grade gold showings on this fault system that rips right through the property. So it's a very important precision because it's 100,000 meters of diamond drilling, 600 diamond drill holes from 0 to 300. And there's, I would say, 10 or 11 distinct target areas that you can find on your website. And that's what we'll be drilling over the 18-month period. So it's a very ambitious plan, and it's a plan basically geared towards trying to establish the center of gravity of what we think could be a cluster of mines, the likes of Chimo. So, and in this current environment of rising gold prices and competitive and nascent M&A activity, I think it's really important that our drills address the camp scale target out there. So that's just a correction that I wanted to bring to the table before we start talking.
I appreciate that. And there's a lot in there that I'd like to get more specifics on. Just some housekeeping before that, though,
Yeah.
quickly. In your SEDI filings, it looks like your CFO, Nancy, has been selling some shares. How come? What's going on?
Okay. Well, there's some options in the money, and here in Quebec, not only do you have to pay for the options that you exercise, but you have to provide immediately the perceived taxable gains that that the accounting has to send to the government. So if somebody exercises options here in Canada and does not sell any to cover, well, you're actually paying income tax on revenue that you've never pocketed.
Mm-hmm.
And I'll let you into a little secret here. There's we pay quite a bit of income tax here in Quebec, and so I think the selling was only to cover the cost of exercise plus the taxable gains that she had to pay immediately, even before she got to selling.
Well, you do get cheaper power, so it's only right that you should pay more taxes.
Mhm. Actually, that provision goes back to a scandal. I think it was the Nortel telecom scandal many years ago, where the government actually got hosed, and they never got to take in the taxable gains from all those employees that had exercised options, and there was no way they could recover, or else a lot of individuals would have went bankrupt. So it's law here. You exercise options, you have to pay taxable gains right then and there.
Mhm.
Warrants, not the same thing. All the warrants and options, it's no.
If I had to guess, I would have thought it had something to do with maple syrup, but apparently it has something to do with telecom. Who would have thunk? Uh,
Mhm.
I'll stop teasing. Talking about SEDI though, last we spoke, you told me it's hard for management to buy shares because you're often blacked out as you have assays coming in on a regular basis. I do see
Yep.
though that Manuel, one of your directors, has been able to work around that and he's been building his position. Do you expect yourself to be doing that and increasing your exposure to Cartier in the coming months?
Absolutely. Again, insiders cannot buy when they want. They can only buy when they can. And myself and the vice president are the one and only people that can decide when we're in blacked out. For instance, we felt that in light of this morning's results, which are the historically the highest results Cartier has ever published, we felt that there was a blackout in place. So I don't I believe you would not have seen any of the insiders buying or selling in in the last 2 weeks. And since we're going to be drilling nonstop since we've been drilling since August 2025, and we're going to be drilling nonstop till Easter 2027, there will be many periods when we're blacked out. Blacked out because of diamond drill results, blacked out because of updated resource estimates and updated PEAs. And I would think that when we do get the metallurgy results in, that will also be very important. So there will be many instances where the insiders cannot buy. And I think for an individual such as Manuel, who's out in Belgium, apparently Belgium is putting in taxable gains on selling shares or optioning stock options. So Europeans are going to be faced with that as well if they sit on boards. They're going to be faced with a similar situation as Nancy.
I'm based in Belgium myself, and I think options, not sure, but I think they might be treated as income at a certain point, and that does get complicated. But I promised not to do 10 minutes of accounting, and I didn't keep that promise because it's been over 10 minutes now. But I will move on now, and I do want to talk about contact sector first.
Sure.
You've drilled the NCZ zone, so the North Contact Zone here. Yeah, yep. NCZ. And some news from today, even, again, as you mentioned, 111.5 grams per ton over 2 meters. And there's spikes as high as 340 or almost 340 yes. grams. And that's not a typo, so it's 340 grams over a half a meter included in that broader interval, and that at about 225 meters depth. But you've also had other hits there before that. So we had 16.7 grams over 2 meters, 5.9 grams over almost 8 meters, and 195 meters depth in one hole. 65 meters further away, you drilled 4.3 grams over 2 meters, 1.3 grams over 12 meters, and again over 200 meters deep. And so there's also visible gold in these holes. That's how you describe it. But there's also lower grades in both before and after these significant intercepts that I mentioned, right? And then in a follow-up news release, you also have wider intercepts and also smaller intercepts, some as small as, again, a half a meter. So really why I'm rattling out those results here is because of how significant the grade and width variability is. Yet you keep drilling this and you want to drill this more. Why? What's the geological thesis behind the potential for, again, what I'm looking for here is a coherent resource, really.
Very good question. The contact zone is part of a historic discovery that was punched by one hole by Chalice Gold Mines in 2017 or 18, something like that. And they had hit, I think, 4 grams over, a few meters, enough to demonstrate that there was another system bubbling out there. You have to understand that this is... if you look at the maps, there's the laterally Cadillac fault that rips through the property and rips right through the Chimo mine, past producing gold mine. This contact zone is on a parallel fault to the north by a few hundred meters. So when we say we're going to be drill testing 15 kilometers of the laterally Cadillac fault, we've just discovered in the contact area a fault which is parallel or probably a splay to the Cadillac fault. And we see it ripping across to the west in other occurrences that were drilled and in VRIFY. So are we really testing 30 kilometers of prospective fault system? That's the first element. The second element is this is a new environment that sits in contact with the volcanics to the north and sedimentary package that is marked by this Héva Fault zone. And the North Contact Zone, as you pointed out, is part of 3 zones, 3 stacked, very high-grade vein systems from north to south. And those 3 veins occur within a 50-meter package. And the rocks in between and some to the north and south have lower grades. So, and since we're drilling there from 0 to 300 meters, not only have we stumbled across a new system that needs to be understood with tighter drilling, there's a mix of high grades over thin and wide intervals. There's a mix of moderate and lower grades over thin and wider intervals. And we've established that so far over a 400-meter strike length and down to 300 meters. What is not presented into the press release is there's also historic geophysics that was done. Well, yeah, no, we did. We mentioned it in the quotes. There's historic geophysics that has been done further to the east that has the exact same signature as what we drilled. And the only reason we didn't drill that yet is that we wanted to understand what's happening at contact. And so we do mention that we're going to be expanding that. What is of greater significance is that we're seeing similar diamond drill hole intersections much further to the west in the vicinity of the past producing Chimo mine, and even further to the west as you enter the property in the access target area. And that was that was actually well documented by the recent VRIFY AI that we did. So what's really significant here, it's a really new environment. And different from the Chimo mine system that we had been drilling for the past 10 years. And it's only one of the 10 targets I mentioned over this 15-kilometer strike length. So the takeaway here is one of the very first target areas that we started drilling is hitting and is reporting really interesting stuff. The second is it's only one of the 10 or 11 targets that we'll be testing. The third is it's all shallow, and we need to pause on that and redesign an expansion program. You know, we're not condemnation drilling here. We're trying to establish if at the contact, the rapid, the Bateman, the Hope, and all these various targets, which one is going to be a huge or has huge potential. We don't want to be overly focusing on one area, and then a year from now finding out that we had another system brewing. In this nascent M&A market, we want to make sure we don't leave anything on the table should we be exposed to transactional stuff.
What I'm really trying to understand here, Philippe, is whether NCZ is a continuous zone in and of itself, or just a great spike of source, or maybe just discontinuous lenses, or what's going on there geologically.
No, and the answer is no. It's not an isolated occurrence. And what we've done is on every time we do a press release, we provide a figure with a plan view, a section, and a long section. On the long section, you can see that it's still open east and west, and we've drilled it, and it's showing systematic high-grade hits over about 400 meters, and from surface down to 300 meters. On a cross section, you could see those three parallel veins that we're talking about: north contact zone and south contact zone. And on the plan view, well, you could see the lay of the ground. You could see an excellent access road coming in. You could see that this part of the project is drillable 100% of the year, right? All season. And as soon as winter hits, we'll probably have to leave this area and go to other areas of the property, other really nicer targets that unfortunately sit in swampy areas. We could drill those 4 seasons out of the year. However, in order to keep our diamond drill costs, all-in diamond drill costs low, we prefer to drill those in the winter.
Right. Yeah.
So it is extensive. It's not a one-off. 03, Chalice drilled it in early days, one hole. 03 came in and did a fence or 3 holes around it. It was still there. And then in the Chimo area, we were understanding the plunges to be steep, westerly plunging. In this area, we didn't assume that was going to be the case. And so we've done a panel of drilling, and now we're seeing, and we're very fortunate to have done that, we're seeing that there's a steep easterly plunge. So it's you don't want to be wasting drill holes on wrong vectors, right? So that's why we're drilling. This is the 3rd release in that area, the 4th batch of results from the entire program, but the 3rd batch of results from this contact area. And I suspect there's going to be more because we want to finish drilling off the crown of that target area.
Mineralization also seems to occur at the volcanic sedimentary contact here at NCZ. How continuous is the contact zone laterally?
Well, on our property, it occurs over a 20-kilometer stretch. Mm-hmm. and it is known to provide target type material, whether it's VRIFY AI, geophysics, geochemistry, or historic drilling over a 15-kilometer stretch. So we could push it to the property boundaries, but we have identified that, I think, over, let's say, one, two, three. To the east, we have the Bateman target. To the west, we have the Simon and the Access target over a 15-kilometer stretch. And that's north of the or historically known to be more prospective Cadillac Fault trend.
So you've done like what, structural mapping or oriented core to start thinking about continuity, or is it too early for that?
No. What we've done is when we acquired the O3 asset in 2022, the very first year, what we did is we focused on integrating the West Nordo deposit to our historic or to our resource estimate. And parallel to that, we drilled around the Chimo mine shaft area. But concurrently, our VP went out and did a compilation of over 800 historical drill holes that had been drilled from 1943 right up to very recently by Chalice and O3. And a lot of that core was, well, we did have a lot of the core, and all we had to do is we had to go back into the field, identify the casings, and twin some of the holes to ground truth a lot of these historical showings. That was 2023 and 2024. At the end of 2024, it was obvious to us that we were dealing with a camp scale target. And that's why we on the one hand, we sent off all the information to verify and backed off. You know, we don't want to have geologists' ego in there. Just backed off and let them weave their magic with the VRIFY AI system. And on the other hand, we did a whole slew of traditional targeting, and we're mixing both of those, and we're using the historical geophysical surveys and the historical soil surveys and other mapping stuff to come up with these targets. Keep in mind that those 600 diamond drill holes that I talked about earlier on in the interview, well, all of those diamond drill collars are pre-located and set up. So it's not like we're inventing targets as we go along. We've been at this target generation program for over a year, and then in July we set it in motion. In August we started drilling, as you mentioned.
I'm thinking about, again, the contact zone geometry here. How does the contact zones geometry tie into the Héva Fault or I don't know how you'd pronounce it actually in Quebec accent?
The Héva Fault. It sits on the Héva Fault, and that fault has.
How are they oriented? Because you said I'm sorry for interrupting. How are they oriented? How does it sit on it?
It sits right on top of the fault, right at the contact of the volcanics and the sediments. So that fault zone obviously is sometimes it's right on the contact, and it branches, bobs and weaves, and affects both lithologies, the volcanics and the sediments. And where this very prominent longitudinal fault mostly in east-west direction is intersected or cross-cut by northeast trending brittle faults. Well, that's where you concentrate your gold. Typically, those fault intersections provide for about maybe 150 to 200 meter strike mineralization potentials. Well, in this case, it seems to have seeped up to 400 meters. And for now, we haven't closed off the system to the east and to the west. So there's more to come on this area. But obviously, I would like to get drilling the other targets as well. We don't want to drill beneath 300 meters. As I expressed in other interviews, the penetration rates when you're drilling slow down. And the cost of drill meter goes up. So the sweet spot for our team for now is 2 machines, 0 to 300 meter depth maximum, and nonstop drilling. And that provides us with an all-in $110 per meter. Simply because it's a hefty contract, so the diamond driller gets the control and his revenues. It's a lot of assaying. So the all-in means site preparation, the drilling, the core logging, RQDs and pictures and all the testing in the core shack, the sampling, the sawing, sample preparation, and lab and assays. From drill site to press release, $110 per meet.
How deep, to the point of depth, though, how deep do you think the system goes? And maybe more importantly, really why I'm asking that is because a lot of Abitibi shoots, they kind of thin out or dilute at depth. So what's the thesis for
Well,
what you have here and how deep does it really go?
correction. I don't mean but listen, La Ronde at in the Cadillac area goes down to 3 kilometers. Goldex goes down past 2 kilometers. The main vector in the Abitibi is, in fact, is a depth. They're cigar shaped, and they just go on and on. Obviously, when you get to a kilometer or 2 kilometers, look at the Radisson stuff, look at the Amex stuff. So, like I say, the main vector in the Abitibi is once you identify the tip of the iceberg, it's going to continue at depth. But it's the trick is in identifying as many of these subsurface to shallow occurrences, and then you're able to design an intelligent follow-up further down the line. But if you don't identify them in your global drilling, you're bound to have to leave them off off the table when you're negotiating or when you're trying to design a mine plan. Imagine putting all your infrastructure or front loading your infrastructure at the Chimo site, and then figuring out that maybe contact or Bateman becomes the big deposit. Mm-hmm. Engineers are not going to like you if you haven't done your job properly.
What is the because you talk about follow-up drilling, what's the grade thickness that you're prioritizing for follow-up drilling? What's kind of the kill criteria, if you will? What's too narrow or what's too low grade to follow up on?
Well, typically for underground mining, you don't want to go below 2.4, and you want metal factors of 50 and 60, right? So if you have let's say 5 grams over 2 meters, you've got 10 grams. You got a metal factor of 10. That usually doesn't really cut it. But I mean, in our case, in this case right now, if we backstop it to our experience at the Chimo, anything above 30 and 40 or 50 metal factor is perfect. Unfortunately, if you only use the metal factor and you look at long sections and most of our competitors, a metal factor is usually presented over a 1 meter width. So if you see 30 metal factor of 30, that's over a meter. So underground, if you're mining that, you're going to have to dilute that with 1.5 meters of zero grade. Mm-hmm. And so you're seeing a lot of people just cherry pick and put the higher grades. Mm-hmm. And then when they do the resource calculation, they have to slap on the dilution amount, and then your grade drops, right? And we've seen that over and over again. What should not be lost in our discussion here is, because we're drilling from 0 to 300, we are trying to expose another bonus, another value proposition of this project, which is the open pit potential. Because for the past 10 years, we were focused on Chimo, the past producing Chimo mine that has a shaft that goes down to 920 meters or 960 meters. And we loaded that interpretation over an underground operation. In the next iterations of the PEA or pre-fees or whatever, this time we're going to confront ourselves with a scenario or multiple scenarios where we're going to consider hybrid toll milling and milling on site, hybrid open pit and underground, hybrid shaft and ramp and starter pits to then take a ramp. So we're going to really look at the best scenario moving forward, and then decide, do we plow ahead? Do we keep drilling? Do we further de-risk? Mm-hmm. But for now, we're very happy with the success. We're very happy with the way the market is reacting. I would love I would really like to expand the program and accelerate it and take advantage of this wonderful window of opportunity of rising gold prices and interest in our markets, right? I'd like to take this program from 100 to 200 or 300,000 meters and bring in an extra 2 or 4 machines because we've sort of we would not be prospecting with a drill. We thoroughly understand the system and how to tackle the targets, right? Even the verified targets. One hole does not kill a target. So we've confirmed to verify that when we do test our targets, we're going to go in with a cluster of 3, 5, or 7 holes under the targets. We're going to respect those targets, right? Because it's not a punch hole thing. It could have a strike length of several hundreds of meters.
Well, and the market does like high grade, and the market's been reacting well to what you have. Again, volumes up, share prices up. I'm wondering the high grade, how much of it is significant or is going to be significant toward a resource. So again, going back to these intercepts, you say that true thickness is 55 to 80% of the apparent width that you're reporting there. And again, some of these are like a half a meter intercept at apparent width. So when is it too narrow at true width, or what would you consider too narrow to add or to consider significant for a resource?
Well, if we tend to, obviously we want to respect the geology. So when you see a quartz vein with 20 or 30 specks of, gold grains, visible gold, and you see that vein over half a meter or 60 centimeters, there's no sense in trying to dilute that lithotype with extra bland material because you're not getting a real signal. But then when you do your compositing, you want to be representative of a minimal mining width, right? So the high grades at contact, I'm not saying this is going to be the case for all the other zones, but at contact there seems to be quite a significant repetition of those high grades over the 400 meters. Sometimes you'll get a hole that will be maybe 5 or 6 grams over 2 meters, but right next to it you have a hole that graded over 300 grams per ton. And so there is inherently in most gold systems a variability that you have to address, and the only way around that is by increasing the number of drill holes to get a good statistical sampling of what you're dealing with. Yep. And in the case of contact, I guess we're luckier because there are actually 3 very distinct veins in that contact zone area between the volcanics and the sediments. It's not like one that seems to be sliced up and repeated by folding or anything. No, this is over the 400 meter length. When you're drilling from one section to the other, you can distinctly see these 3 high-grade vein sets. And sometimes they're really high grade, sometimes they're just average grade. But again, the takeaway here is you could look at this as a potential starter and smallish open pit.
Mm-hmm. Yeah. What was the average grade and width mined at Chimo historically again?
Okay. Chimo had 3 production periods, and I'll get to your answer. In the 60s, they mined high-grade gold, 15 or 16 grams per ton, associated with iron formations in the volcanics and sediments to the north of the fault zone. In the 80s, they had discovered a new vein set within diorites and basalts, I think maybe 50 or 100 meters south of what they had been mining in the 60s. And then that was wider, but they brought the grade down to 5 or 6 grams per ton. Mm-hmm. When Cambior ended up buying the project for $10 million in 1988, they had run out of mineralization. And so they bought an exploration project. And then they discovered yet the main gold zones south of the Louvem 1980s production. And that's when they discovered that, yes, you did have high grade veins, but the selvage, the rock mass around that had grades, maybe 1 to 2 or 3 grams per ton. So that crew Cambior, who then became IM Gold, pushed the grades down to 3.88 or 4 grams per ton. And I guess they were one of the first bulk mining underground scenarios in the Abitibi. They were mining, 10 to 15 meter wide stopes. It was absolutely spectacular. And when we bought the project in 2013 to 2016, we audited all of the data and interviewed the previous mine geologists and mine managers. And when we interviewed one of the mine geologists, we quizzed them on the high grade, quartz vein related gold. And they said, yeah, Phil, that'll be about 25% of your ultimate ore, at least at Chimo. And then and those provide erratic on and off targets. But you're better off shooting for the greater volume at a more moderate grade, because that's a much bigger target. And then when you start drilling that, you will on and off drill these high grade zones, which become jewel boxes once you start mining either underground or you isolate them in potentially pits going forward. So the grade of the high grade veins, or the high grade gold, is always in quartz or silicious material over submetric to metric widths. And the lower grade or moderate grade vary, from 1 to 3 or 4 grams. That's in the disseminated sulphide ore on either side of the veins, and that is in the order of 5 to 15 meters wide. Mm-hmm. And the quartz, the high grade quartz veins, always telescope the much larger volume of lower grade rocks. So there's a variety of way you could look at this. You could cherry pick and just focus on the high grade stuff, which some of the mining scenarios I guess when we do the next PEA or pre-feasibility, we'll look at that. So why don't we do, or what I think Amex is doing, focus on high revenue, high internal rate of return stuff, and then kind of stage yourself through the production to ultimately pick up all the gold that's there. It is absolutely, I think, criminal to identify gold ounces and then just to leave them underground. I always wonder why people want a million ounces at 15 grams when they could have 3 million ounces at 2 to 3 grams. You're mining ounces, not grade. Grade is just there to help you design your stuff.
Well, to that point, how would you do it? How would you control sort of coarse gold bias, and where would a new resource have to be capped at, given these? Again, it's almost 340 grams a meter. So where would you have to cap stuff like that?
Well, to be very honest, we're relying on expert help by independent consultants to look at this where they've looked at other projects in similar jurisdiction. Makes no sense to compare what we're finding with, projects in South America or the Southwest US. But, and that's what we're working on. While we're drilling off these things, we're telling them, look, this is what we're coming up with. So I do know that in the scenarios that they're working working with a resource block, what they call the LG, the low grade stuff, and they're also mapping out the high grade blocks. Then they give that to engineers that will do Deswik stope optimizing and fixing the capping and the cutoff grades, and then they send that back to the resource guy, and the resource guy comes up with a resource estimate. But your total resource that you're going to be mining, whether it's a lower 2 to 3 gram per ton open pit or underground scenario, and the higher grade 10 to 15 gram per ton stuff, well, you're potentially going to have to address the issue that you're going to have a hybrid approach to it, and mine both of them, but not concurrently, and sometimes separately. My job and the VP's job is to make sure that you map out all of these occurrences, and at each occurrence you provide a sufficient density of drilling that they can work with it. Mm-hmm. If you just pick it off and your holes are spaced, if their hole spacings are 200 or 300 meters apart, you can't generate resources with that. At Chimo, we've seen that because there's over 4,000 diamond drill holes, you're able to establish geostatistical behavior. So you know that your drill spacing has to be anywhere between 50 to 75 meters if you're going to want to work with that, right? And the name of the game at this point is not to measure your resources. It's more so to establish a greater shell of inferred. And in the case of contact, well, it's easy enough to go punch in some holes and flip it rapidly to indicated and measured. And because if you do too much of that intense work, you're not going to capture that value as a junior company. Mm-hmm. You want to map out, you want to scope out, you want to do reconnaissance work at the entire project level to then come back and do rating, ranking, and prioritization for the next round of drilling or delineation.
Well, talking about a resource, what would I suppose you can talk about that more in depth a little bit here, but would the drill spacing have to be in order for it to be sufficient for an inferred resource, and how much more drilling would it really take at the NCZ?
On average in this area, in this part, it's about 65 meters spacing.
Okay. I would have thought it's less actually, given the great variability. How come 65?
Well, because of the actually it's 65 in the long ellipse. I wouldn't go for the short because like I mentioned, they're elongated, cigar shaped or football shaped, and so what you do is you do your geostatistics, and the machine actually calculates. Well, look, since your geological parameters are such, I'm going to allow lateral length or drill spacing of this if I wanted to go from inferred to indicated and then indicated and measured. On the long axis, it's going to be different, and on the thickness axis, it's going to be different. So the 65 is actually the long axis that I measured. So you're quite right. It's less, but let's not get into the weeds for now. You'll see that in the coming months with the next updated resource estimate.
I guess this is mostly talking about the NCZ again. That one target is the mineralogy of the host, where so essentially where the gold is hosted here. Is it similar to the rest of the targets and what you've drilled before?
The answer is yes. The answer is yes. We look at the rock and we say, okay, I'm in this part of the project. But honestly, our vice president we were discussing with other geologists recently, and if you brought this to a new group of geologists, they say, Phil, it looks all like, whether you're at Chimo, whether you're at the portal zone, whether you're at the contact, it's always sediments, basalts, shearing, veins, and or silica flooding with pyrite and arsenopyrite, and it's just ubiquitous. So the in-house group, we're pretty good at saying, okay, you're in the Bateman area, or you're in the contact area, or you're in the portal area. But for most geologists, it's the Cadillac type mineralization.
Mm-hmm. Yeah.
If there's gold, there's either silica flooding or quartz, and there's basalt or sheared sediments, and the ubiquitous presence of sulphides over 5 to 10 meters, and sericite alteration. You know you're in the system, and it's easy to sample the material. You're not going to drill a hole and say and not sample core. It's that obvious.
Yeah. Well, you do mention in the description here that they're disseminated sulphides. So we're talking specifically arsenopyrite and pyrrhotite. Yep. How much of the gold is in the veins versus the sulphides here?
And I'm only talking about our experience at the Chimo mine, past producing mine. Mm-hmm. 25% of the gold is free in gravity related stuff, and 75% is associated to finely disseminated or free flex in the rock, in the selvages in the rock mass, either side of the silica stuff. So there seems to be, that's the rule of thumb for now. So when we explore an area like contact or abatement, and we start to see the ingredients, the shear results in volcanics and the sericite and the quartz veining, and we immediately think or use a rule of thumb that's going to be 25% free gold and 75%, finely disseminated gold.
Right. Okay. And I suppose this
And
gets.
we're doing metallurgy as it is right now, right? So we launched that mandate, I think a month ago.
Mhm.
We're seeing the quotes come in from the labs, from our very robust and detailed program that the metallurgists designed for us, right? They actually came to us and said, look, you have these three zones at Chimo. This is how you must design your composite sampling for it to be representative of what we want to see, right? And so those samples have been taken. The labs are soon, the selected lab is soon going to get those samples, and then they run a mess of tests. And then you'll get a breakdown. So in one of our next interviews, please come back with that question, and you'll have a more detailed answer.
Well, I suppose it gets a bit technical here and a bit theoretic, but because you're also seeing smoky quartz stockworks, are you thinking there are two generations of mineralization, so one
Yes.
fine and one nuggety, and what would that mean for future exploration? But also, again, all of this is thinking in the direction of a resource, right? So what would it mean for exploration and what would it mean for your resource?
Well, again, stepping back, I did mention that these very long regional longitudinal shears, which are the Cadillac Fault and the Héva Fault, and between these two faults, they're connecting faults and potentially splay faults. So when these two fault systems seem to be intersected by cross-cutting faults, then you've provided focus for permeable focus for fluid flow, and in those specific environments, which are prime targets, we go down and we drill. And invariably, when we drill those target areas, we see a wider rock that has been, hydrothermally injected and altered and mineralized, which is a broader system. It could have high grades and a mix of high grades and moderate grades, but invariably that system also is telescoped by a later event, or what we think is a later event, of higher grade quartz vein or silica flooding within that rock that has been pre-prepared by the structure and the alteration and mineralization of the first event. And that first event is typically finer grade, much broader, and can have low to moderate and high grades. But the second system is generally, if not always, much higher grade and nuggety.
I like pretending to be a geologist. So this is the conversation is welcome to me. But I also see that there's sphalerite, galena, tourmaline. Aren't those base metals pathfinder elements? What are they doing here, and what do they mean for the system?
Well, indeed, along the entire fault zone on our property, we're seeing local ultramafic volcanics. We're seeing potentially small slivers of felsic volcanics. And then to the south of the Larder Lake Cadillac Fault, specifically south of the Chimo mine, there's a vast basin of sedimentary rocks where historic explorers have discovered gold-bearing felsic dikes, felsic and dioritic dikes, which is reminiscent of the Canadian Malartic system further to the west. So we've identified four distinct types of gold settings. And the last one, the fourth one with the dikes and the sediments, we've not done a lot of drilling there, and we will be devoting maybe 5% of the entire drill program to see if there is that potential there. And then when you do lock into a system like that, well, that's a totally different type of drill hole deployment and spacing, because it's either there or not, right? So you're dealing with elephants or not.
And is that related to the Cadillac Fault?
Yeah, yeah. And actually, it's not only the Cadillac Fault, but if you look at one of our maps, or several of our maps, you'll see the fault system coming in through the property. In two locations, we see it, there's a little kink in the fault, a flexure. It's just a warp. And then it goes on, and there's another warp towards the eastern part. Those tend to be, from an empirical point of view, just observing along the rest of the Cadillac Fault from our property to down to Wawa. Every time there's a kink or sort of a warp in these regional fault zones, those are prime targets because that's where you create a structural openness and permeability for your fluids to come in and mineralize the rock.
Well, that's interesting because you're also seeing biotite chloride carbonate alteration here, and that's kind of the smoke alteration for the Abitibi as a whole, if I understand correctly. And
True, true,
yeah,
true. But listen, the chloride and sericite is fine. As you have to remember that this part of the project, as you go to the east, there's the Grenville Front. So some of the chlorite that we're seeing, and especially most of the biotite, we have to be careful. Is it contact metamorphism biotite or is it hydrothermal biotite? And even the best of mineralogists sometimes have difficulty distinguishing between the two. And in some parts, most parts of the properties, we're looking at green schist facies. And then in some other parts, north of the contact zone and Bateman area, we're seeing amphibolite facies, which is, so far as we could tell, mostly related to contact metamorphism of batholiths and large intrusives to the north and to the east.
but again, you also have the silica flooding because of the smoky quartz. So where do you chase that from here on out? And I guess, is this even the vectoring tool for you going forward?
It is. What is the vectoring tool is these fault intersections, the alteration, and the presence of the quartz veining, those three elements. So, but as you go down in these elements, the quartz veining and some of the finer alterations, those are more constrained around the higher grades. So you shoot for the barn door, and then once you've found one, then you try to go into the system and fine tune your drilling. It's not something you could actually tackle and do a hole every 500 meters and say because you're going to miss it for sure. The entire strike length of the past producing Chimo mine is barely 200 or 300 meters.
Mm-hmm.
And if you look at even the mega monster Laron mine, I think the entire mine system can fit on two claims. I remember showing up at my career started in 1986. When I graduated, I came to the Abitibi, and I think Agnico Eagle had the team there had just punched the top of what was to become the Laron deposit. And they had been exploring the extensions of the Bousquet system, Bousquet de Magami, and the guys just persevered. And then we're talking 1986. And now we're 2026. That's 40 years of continued success once you lock into a system, right? And one of the things we do is in the past I've taken people on field trips in the Abitibi.
Yeah.
And one of the pranks I pull on people is we go near the Laurent, there's a north-south road running through the Laurent area at the top. And the rocks are sheared and they're rusty and stuff. And I said, go ahead and pick up a sample. And they usually, they go in, bang a rock, and a few weeks later they call me and say, Phil, this stuff grades a few hundred ppbs. And one guy goes, well, I got a gram. I says, yep. And you're standing on top of a 10 million ounce system. So it can be that discreet. So you have to keep your eyes and nose open at all times when you're drilling, and that's why we've designed this program to be 100,000 meters, but 600 diamond drill holes. So the average, if you do the math, is about 170-meter length of holes. So we're drilling 1.5 drill holes per day, and that's why you've seen so far, a rapid clip of results. We're very happy with that.
Mm-hmm. Well, I also wanted to ask you, talk about vectoring and how you predict your next holes. Essentially, you want to talk about predictive structural modeling and so on. But you're also relying on Verify's AI for target generation here, as you mentioned. How has that been so far? And I guess also importantly, how much human geological validation goes into those AI picks before you actually go and sink the drill?
Okay, I'll walk you through the process that we've used. Our database is 4,600 diamond drill holes, 544,000 meters of diamond drilling, 150-ish thousand assays. Then there's local geophysics, IP, EM, MAG. There's property scale geophysics, sometimes MAG, sometimes EM. Then there's the regional geophysics. And so we surrendered that entire data. Oh, and then there's humus, bark sampling, and soil sampling that's been done across most of the property. We surrendered that entire database to the VRIFY group. Now, keep in mind that one of the leaders at VRIFY is Jean-Philippe, who actually was the guy that won the Integra Gold contest many years ago. Steve Jung went out and hired this guy and to build this system. So this individual and the team that they've assembled have they have a lot of case histories where they're able to pull this data and calibrate the data to known positive test sites. Mm-hmm. Now they did that at the Cadillac project level, and as you would expect, they mapped out the system. Obviously, recognized all of the gold showings because the gold values were part of the experience. But they pushed it even further, and they're actually, I call it Tinder dating between drill holes, right? So you're actually asking one drill hole what has gold in it or alteration to set up and match with a neighbor and to see where can I create vectors and stuff. That's one of the things. The other thing is we purposefully we did not involve ourselves with telling the machine how to look or what to look for, right? Because that would have been biasing. That would have involved geologist ego. And if you do that, well, the machine's gonna go off on what you're telling it to do. So fortunately, when we got together with the VRIFY people, obviously I think 75 or 80% of the targets were exactly where we would have drilled it. Our big surprise is when the machine was actually saying, when I mentioned earlier on in the interview, I said, well, to the west, this Héva Fault actually lights up in the Simon area and the access area, if you look at one of our maps. Well, that's almost entirely verified. We have not drilled a verified target yet. When we do, we will commit to drilling many holes per target to make sure that we're actually testing the target. And I fully intend on giving him the benefit of the discovery because it will have been a verified target. Again, I liken it to a racehorse. You go from point A to point V with the traditional geological targeting. But with the VRIFY system, you just get there a lot faster. And when you drill, if you have a positive hit, then you can re-input that data into the system, let the machine run the algorithm once again, and it either strengthens its targeting or says, I've learned from this, and it starts to point you into another direction. Now you have to go along with it and trust it and actually test it. If you take one of these artificial intelligent targets and just pump one hole on it, and let's say you don't hit anything and walk away, you're just going to repeat what historic explorers have done. They just wait, they just hope for instant success. And if they don't get it, then they walk away, and then the next clown that comes around discovers it.
Mm-hmm. And that's specifically, we're talking about the NCZ here. Well, when you talk about AI, you're talking about the whole project or all the holes that you're putting in, I suppose.
The NCZ, the contact, but let me stop you. The contact area was actually validated that VRIFY system. Yeah, they said there's a target there, but we had already, we had already committed to drilling because had been discovered and rediscovered by Chalice and then O3, and we went in, and so I think our claim to fame is that we believed in it because we saw the ingredients there, and we just, this thing is now 400 meters wide, long, by 300 deep, and minimally, for now, 50 meters thick. Keep in mind that we send for the zone sampling in situ. And then there's always the remainder of the hole that we send in, but coded second or third priority. The odd little vein that drags or to the north of or in the upper part of the drill hole in the end part. We send that second or third priority. And more often, sometimes we get the assays back a month later than the ones we're announcing. And we're surprised to say, wow, the system's still alive to the north. And it provides us the opportunity to go back the drill, call her up, and drill another hole. In and around these faults, more often than not, the geophysics can help you, right? But then sometimes it doesn't because there's a prominent iron formation or a prominent graphitic fault. It just blurs the geophysical signatures. At the contact area, we're very fortunate that we don't have that contamination signal from geophysical surveys.
Yeah. Well, you've also had some results from other zones of fuel from main sector. I believe you've had results, and the headlines are again high. We're talking high grade narrow, so 35.5, 20.4 grams. What's going on there? How much of an importance are you placing on main sector, and what's that looking?
Okay, on the one hand, the main sector is very important because that's where the bulk of our current ounces are, right? On the other hand, the type of drilling and the results that we expect or that we'll be happy to get in that area are totally different from new sectors that need to grow. In the main area, because you're only 100 or 200 meters north or proximal to infrastructure that's already planned, then that stuff will likely get included in a future mine plan. So we have a different level of tolerance, if you may, for that area, right? And the next resource update and the next PEA will likely be done in that general area. All these new targets that we're drilling, by the time we put out a resource estimate or PEA, that document will most likely be stale dated because we obviously have grown a resource base around, well, just for instance, the contact area. And it's early days, right? So we'll see.
Yeah. Having seen these results now, are you thinking you might update the resource before the 100,000 meters have been completed, or are you going to wait for all those assays to be back?
No, I think we're going to update the resource significantly before the 100,000 meters. There's no sense in waiting the full 100,000 meters to be drilled on the one hand, so that's positive for our shareholders. Unfortunately, as we drill, the resource keeps growing. So, but at least they have a number. At least unfortunately, when you do a resource calc, that number is anchored in people's mind. In this case, we just want people to understand that it keeps growing. When you do a PEA, you're only looking at one iteration of how you would break that rock and make money from it. And different companies have different ways of attacking a system, sequencing logistics of how they're going to mine it. Some they're just different. They have their secret recipe of making money. And then finally, when you do a PFS or an FS, you're locking in. You're actually locking in how you're going to mine it, and that becomes tricky because you have to lock it in if you want to go to the full permitting process, right? A little play with words here, PFS. The Cadillac project is permittable, financeable, and scalable. So it's not pre-feasibility. That's what I like to think and talk about when I think of the Cadillac project. It's a 15-kilometer strike of very prospective rocks The same project area covers the entire Val-d'Or mining camp, or the entire Malartic mining camp, or the entire mining camp at Presac that goes from LaRonde to Westwood. It's huge. It's just huge. I think it's lost on people that the actual scale of what we're trying to do. And I'm very happy that Agnico sponsored or co-sponsored this program, because I believe they see it too.
Mm-hmm. You bring up an interesting point about Agnico, and I do have a question about it. How much of the 100,000 meters is now complete, by the way?
As of my last monthly report to the board, I think it's 13,500 meters.
How much money do you have left?
10.3.
Oh, okay. So you spent less than $1 million since June.
Yeah.
Since the end of June.
Yeah. All in, $110 per meter.
Yeah. Yeah, you said that. And it's, I mean, it's still interesting to.
If you read the financials, right, there's always with that's about $800,000 that's due to us by the Revenue Canada, because historically we invested hard cash in previous exploration programs. So that'll be an extra almost $1 million coming to us in the next month or so.
Yeah. Yeah. You're also doing the initial environmental baseline studies at Cadillac. How's that going? What questions are you getting? What answers are you giving?
Okay. There's three components to that study. The first is a desktop study to rapidly identify, potential red flags. And there doesn't seem to be any out there. The second component is doing the geochemical characterization of the mineralization, the residual rock, and the waste, right? So you want to know if and when you start mining it, what is the residue going to look like? Will it contain deleterious elements and stuff like that? And it actually aids in the future mine design and assessment of what you need when you're building this thing. And the third component is what we call the Chimo tailings project. Because one of the iterations that they're looking at Chimo mine, there happens to be an open pit potential over the southern part of the resource, which the current tailings actually cover. And in one of my recent trips to Toronto, one individual said, "Phil, you assessed the potential for, residual gold in those tailings," because this was like 1990 mining, for one, and for two, that tailings is almost entirely comprised of only the gravity circuit VG type stuff, because all the sulphide component ore was milled offsite. It was only in the final 2 or 3 years that they actually brought a mill on site, and they had not finished calibrating it before the BRIEX or 1997 happened. And so the recoveries then for that type of ore were not optimal. So we suspect there is gold dust, because it's crushed and powdered rock that's in that tailing. And so that the third component of that study that Stantec is running is designing a drill program on the tailings to test and come up with a resource of gold, or if there's a resource of gold in that tailings, and then to assess, well, if there's gold, well, that's something to put in your deck of cards when you're doing your future economic assessments. Because if you have to move the tailings and there's cash to be made there, that's good to know, right? So that's the environmental baseline study in three components, and that has been launched. And as we move forward, the minute we get results or sub results from one of those components, we'll be press releasing that, mm-hmm. as is the case for the metallurgical studies that we launched with Sutex, which is a reputable firm. Well, actually, they have offices in Germany, worldwide, so they're a reputable metallurgical firm.
Well, part one of the environmental stuff says that it's meant to characterize the potential environmental constraints on the project, and so identify potential environmental issues or challenges. What has been identified so far?
Well, for instance, there are two outfitters there. There's one on a lake to the north, and there's another one that's set up on a lake further to the east. There are some people access through our property to go to their cottages or hunting camps much more to the south. And then it's a road. The road access is essentially historical forestry roads. So we've mandated the firm to just map out potential issues, watershed issues. Are there local social concerns and stuff like that? You need to know that it's sort of a pre-stakeholder mapping approach to your project. You need to have answers to people's concerns, and you might as well be doing that early on because in this case, I feel at least that this is going to get a fourth mine life,
Mm.
either on Chimo and or other areas of the property.
Are you talking to the community in the meantime as you're going through all of this? And how's the
Yes.
conversation? I think you were on site last week?
I was in Montreal.
Okay.
I was at a conference, and yes, there's a Lac Simon Algonquin community. It's I think 10 kilometers to the west, and yeah, we've had discussions with them for the last 10, 15 years. I think their prime concern as a community is making sure that, their prime concern is the forestry industry. Because in Quebec, they're reshaping or remodeling the Ministry of Forestry laws and regulations. And it's a big thing for them because it touches the surface, whereas they know that mining is more long-winded, and that's one of their concerns. The other concern is I think that they see this as a potential future employment for their community. What happens with most First Nations is mining companies are very good at and very comprehensive with their impact benefits agreements. And so they always reserve jobs or training for the first members of the First Nation communities. That's good. On the flip side, if the mine is built like 50 or 100 kilometers away from their community, then that smallish First Nation community gets drained of potentially the prime motivators or the go-getters and the influencers of that community. They say, well, I want that job, and they go, and then the community becomes impacted negatively by a drain of some key positive elements. So again, in the case of Chimo, whether you're dealing with the First Nations or whether you're dealing with the Val-d'Or municipality, the project is sufficiently out of the living areas or the town, so as not to be an immediate local impact, but sufficiently close to the infrastructure and the qualified workforce and the individuals for them to benefit and profit from that. So it's not a project that will be a fly-in, fly-out situation where the local communities, First Nations or municipalities are actually being insulted right under their noses because the workers come from other areas. And if you've ever been to the Val-d'Or area, there are a lot of local contractors, Epiroc, Sandvik, and mining contractors and service providers and likes, so on and so forth.
I've not been, but I feel invited. So maybe we'll bring change to that soon.
Well, I'll talk to Matt Manson and Victor Cantori and who else? Well, David's probably busy right now, but
There have been some interesting moves in the region. I mean, just on Friday, Probe Gold will be potentially sold to Fresnillo. That's what was announced. So just about 2 weeks ago, IM Gold announced that they're buying Northern Superior. What's going on up in that camp?
How do I answer this without, well, listen, I could tell you that the Abitibi is a tier one jurisdiction, right? The Abitibi, especially the Larder Lake Cadillac Fault, is home to senior and major mining companies that have tackled with time and developed and shown that there to be established mining camps. So it's hometown to these very senior mining companies, and then in the very recent past, they've attracted outsider competition, such as El Dorado Goldfields, and way back when in the Bay James area, Goldcorp. So, so what I'm saying is when you have a tier one jurisdiction where there's rule of law, when there's a clear path to permitting and production, safe jurisdictions, let's just say, from an ESG perspective, you're bound to attract M&A activity. And I think in the recent past, what we've seen is the senior companies have been very disciplined, and they've stuck to guidance as they should, and they've been extracting gold, and they've been developing their projects, and they've been making a lot of money. But at one point, if you're a certain company X and you're saying you want to grow and you're producing 3 to 4 million ounces per year, well, arguably the next year you have to produce 5 or 6 million ounces. As an exploration geologist, I can tell you there's no exploration program that's going to find you 5 million ounces in that 1 year. So at one point they cross that hump and they have to start to think of the future. And when they think of the future, they like to think of the future not in like one mine, but in a camp scale approach. And they like to tackle and acquire systems where they think, well, once I get this up and going, it's going to be 20, 30, 40 years of production. I'll be able to, mathematically go through the highs and the lows, right? So,
Yeah. What does it mean for Cartier, though? I mean, the fact that you have, a Mexican company getting into essentially Agnico's camp. Is Agnico going to be pressed to speed things up, or I don't really know, or dot dot
okay.
dot? What does it mean?
I have no idea. Fresnillo is a large company, and it's part of an even larger company, Grupo Mexico. So I would think that these people know what they're doing. As Goldcorp, as El Dorado, as Agnico. I can't speak to what the seniors are thinking. I mean, they're on a different level of strategic thinking and planning, right? They're not confronted with the same challenges that we have. And so I could see what people are saying on billboards and the brain farts that they're having out there. But look, if you're asking me to tell you if this deal will go through or not, I have no idea. I have no idea. And I have my preferences, but I'm not going to disclose that here.
I'm one of those people on billboards who has brain. I operate solely on brain farts, actually, to be fair. But would you want to be bought out before you? This is forward looking and speculation and everything. But would you want to be bought out before you complete the 100,000 meters of drilling?
Ideally, no.
Why not?
Well, because you want to have a sense that you're on a level playing field, and then you could you could capture the full value of what you think you have in a negotiation. So if too early on in a very ambitious program like that we've put on, we're being courted, that's not good, especially in Cartier's case where we've lacked at marketing and going out there, and our stock is really, really low. And a CFO, a senior company, is not going to pay 1,000 or 2,000% premium on. They're just going to look at the share price and they're going to put a premium on it, a 30 to 40 or maybe 50% premium, and that's only normal. So the question is, if when you see shareholders say, "Well, that's a lowball offer," well, you as a shareholder parked that valuation there. If right, so you're a victim of your own, So that's the case. So I think if you build value into the work that you're doing, in our case, if we demonstrate that we have a mining camp out there and we keep pulling out these really high grade results, or that we're showing that each target area has the potential to become another Chimo, that value will not and cannot be denied. Now, what happens when you get a friendly offer? An offer, as you may know, it's not the CEO or the board that says, yeah, we'll take this offer. No, 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 no. They have to run it through a banker or an assessor, and they will say, give you a fairness opinion. And then people come in and they say, well, yeah, this is a fair offer. And so it's not done lightly. It really is not done lightly. So, yeah, like some of the comments I see are really gnarly, and but it provides a guy like myself or David or Matt or Victor with, a narrative to develop, because we're always looking to create shareholder value. Every one of us we want to create shareholder value and make sure that we do the right thing. Right?
It looks like there was no time pressure in the camp before this. It looks like now there might be a bit of a pressure on timelines with the new entry into. I'm speculating here and just kind of thinking out loud, really, Philippe. But what else could speed that process up? What would an asset look like that Agnico is interested in? Sort of at what stage is it for you? Is it a PFS asset? Is it a PA asset? What would they want to see and be like, oh, okay, now I really have to have this before someone else steps in? What is that kind of asset that would generate that reaction in them?
Well, the Agnico team, obviously, like every team, likes to have as much de-risking done before they can make a decision. But the Agnico team is also very sophisticated. They have people that look at an area and they say, yeah, this is camp scale stuff, or this system will have long life to it, has legs to it. They look and read a press release much differently from what a retail person will do, right? And so the Agnico of today, for instance, and I take Agnico because they're a significant shareholder of Cartier. The Agnico of today is a totally different Agnico from when they actually took their first strategic investment in Cartier in 2016. Let me explain. At that time, I think, and just come up with round off numbers, they had about 40-ish strategic investments from 2016 to, onwards. And then when they merged or took over Kirkland Lake, well, it so happened that Kirkland Lake had about 40-ish or 45 strategic investments, right? And then a few years later, they took over Yamana. And Yamana had potentially, 20-ish, a lesser amount of strategic investments. So the Agnico from 2016 went from 40 strategic investments to about 100 strategic investments. That's fact number one. Now, they didn't press eject on any of them, or maybe one or two, but I mean, still. Why? Well, because they had their own set criteria for selecting these strategic investments. You would think that a guy like Tony McCutcheon, the Kirkland team, also had a distinct set of criteria. And then Peter Maroney or Johan Bouchard and his team, Daniel Racine, had also another set of criteria. But these criteria all had a common denominator. They're teams that wanted they selected the cream of the crop. Now, of those 100 strategic investments, I would think, or I postulate that those are amongst the 100 best of the 1,200 listed juniors out there for an Agnico. All right. So, and then by simple virtue of the junior exploration companies actually going to the markets, raising money, a company like Agnico could say, well, look, I'm doing $500 million worth of exploration work in any given year. Weighted average of $5 million per company, 100 companies. That's like, it's so, well, I've got my irons in the fire for all this exploration work. That's fact number two, from a mathematical perspective. Now, if you're a competing company, I don't know, Barrick or Goldfields or whatever, and you say, well, I'm not playing in Agnico's backyard, and then you've got a problem, because Agnico and or Barrick and or these large companies, they're all over the place. So you can't use that as an argument not to look at a certain asset that you're shopping for.
Yeah.
So it's a relatively simple yet very dynamic ecosystem, and the these large mining companies, gold mining companies, they have they monitor these very actively, and they're able to react. In this case, Eldorado voted with Probe for the deal of Fresnillo, and Eldorado are mining in the camp. So take from that what you want.
Yeah. I want to let you go here, Philippe. I know you had to run actually 10 minutes ago, and I've overstayed my welcome. But thank you so much for doing this. When do you think next time is going to be that we're going to have an interview? When are you going to have something interesting to say?
Early December. Unfortunately, we can't meet at the Dutch Gold Mess, but I'm going there. Early December for sure. I think I'm gonna have a big block of news. That mix of drilling and other stuff that I've been announcing, and we'll see. I'll give you a call.
Thank you so much for doing this. Really appreciate it.
I like the barbecue stuff.
You have a great day. Thank you so much.
You too. Bye now.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know, and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias, and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company-specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias. Again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should under no circumstances be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. Also, unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find a company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."